whenever we are trying to find out how much tax a company is supposed to pay, or a business firm has to pay, or a person who is doing business, either a sole proprietor or a company or a firm or LLP or anyone. So this is basically, we are talking about a doctor, chartered accountant, lawyers, they have to pay tax. So this is how we calculate basically, income tax from them. So this is, from that perspective, it is very important. So here, this is the pro forma, okay, for computation of income under the head profit and gains of business under the default tax regime. So the default tax regime is that, there are certain exemptions which are not available to you. But if you opt for a normal tax regime, then some exemptions will be available to you. So I'll keep talking about that also. So this is the default, format, but even the regular would be the same like this, but little bit difference. Okay. So we start with net profit as per the profit loss account. So, a company prepares their profit loss account. For example, let's look at, any company. For example, we go to, screener. Okay. For example, and pull out any company. Okay. So, like suppose we, go for Reliance, recently they have, announced their results. So you go to profit loss account. Now you can see this profit loss account, the screener. So how much net profit the company has shown for this year, 2023-24? Anuj?
79,020.
79,020 crores. So this is the profit which, the Reliance has shown. So we start from this profit. Now this profit which the company has, shown is as per the Companies Act. Okay, because all companies are required to follow Companies Act, norms to declare their profit loss account. Because, from this profit, the company can declare dividends. Okay, so this is not for the purpose of paying taxes. Okay, so we start now, since the company prepares its profit loss as per the Companies Act. So normally, if you are a company, then you would have this basically as your starting point. But in case you are for a proprietor, then profit loss account which you have shown in your profit loss account. So now this is the net profit. So that means you have to do some adjustments so that you make it aligned with the income tax profit and loss. Okay. So this is the profit loss as per the Companies Act, or as per your own assessment as an individual or a doctor or a chartered accountant. They prepare their profit loss account. Now they have to align it with the income tax mechanism so that they can pay tax. So there are certain additions and there are certain deletions they have to do from the profits which they have arrived at. So net profit as per the profit loss account will be the starting point. Then add expenses debited to statement of profit and loss but not allowable. So Suraksha, can you read this add again?
Add expenses debited to a statement of profit and loss, but not allowable.
So that means there would be, certain expenses which we have shown in your profit loss account, which are not allowable under the income tax rules. For example, you may have debited some personal expenses. For example, suppose you have traveled to Bombay, okay, and that was your personal visit, and you showed this as an expense and reduced your profit. Now that is not allowed. So you need to add that, expenses. So this is one very simple case where we add expenses. So to understand that, what are those expenses? So let's start with this. In the second sheet, a detailed thing is given. First is given add expenses debited to statement of profit loss account but not allowable. Read this, Suraksha.
Depreciation as per books of accounts.
Okay, hold on. So one by one. So depreciation as per books of account. Now, what does it mean? Any idea to anyone? Suraksha, Kishore? Why we are adding depreciation? Depreciation is an allowable expense, but why we are doing it? Why we are adding to the profit?
It is not cash expense.
It is not
It is,
huh?
it is not in the hard liquidation.
No. Again, you must understand depreciation is allowed as a business expense. Okay.
Yes,
But
sir.
the depreciation which they have charged in the books of account is as per Companies Act, schedules. So, let's go to, here in the summary again. And there are depreciations as per Companies Act and depreciation as per income tax. So whatever depreciation which you have charged as per the Companies Act needs to be added, and the depreciation as per the income tax will be reduced. Okay.
Yes, sir.
So that will understand. So let's just go to depreciation as per the Companies Act. Understand what it is. Okay. Fine. So please ask question. This is the most important part to understand. The first step what we do is that we add depreciation as per the income tax. Okay. So let's go to the depreciation as per income tax as per the Companies Act. So this is what we are saying is depreciation rates as per the provisions of Companies Act 2013. Are you able to see the screen?
Yes, sir.
Okay. Now, while you are preparing your profit loss account, and statement as per the, when you publish that account with the shareholders, you have to charge depreciation as per the Companies Act. Okay. But when you're preparing an income tax calculation, you have to, exclude this depreciation and just calculate the depreciation as per the income tax and, reduce that. Okay. So you have to do this adjustment. So now, just read this, Suraksha.
Depreciation as per Companies Act 2013 for financial year 2014-15 and thereafter. These provisions are applicable from 1st April 2014.
Why? Now, why this figure 2014? Because the new Companies Act came in 2013. Before that, it was 1956. So that's why the things have changed. That's why these depreciation rates are applicable right from the year when the new law came in India, the new Companies Act. Okay, read this further. Further.
Depreciation is calculated by considering useful life of asset, cost, and residual value.
Okay. Now, depreciation is always calculated on the basis of useful life. Okay. So basically, suppose you have bought a machine or equipment, you think the life is 10 years, then you are going to charge depreciation for 10 years. So, in the Companies Act gives you a freedom that you can charge depreciation as per the useful life. If you think the life of the asset is just 2 years, then you can charge 50% depreciation, or in 2 installments, you can, depreciate whole of the asset. So it depends upon the useful life of the asset. And okay, now further read further.
Any method, WDV or SLM, can be used.
So you can charge on a written down value method or a straight line method. That means if you buy an equipment worth 10 lakh rupees, so you can charge 1 lakh rupees depreciation every year. So that will be called straight line method. So in 10 years you are going to charge off that asset. But you can also use written down value. That means a percentage. That means 20% depreciation. So first year you're going to charge, suppose let's say 10%. Suppose you charge 10% on 10 lakhs, it will be 1 lakh. Okay. Next year it will be 90,000, because you will have 9 lakhs written down value. So similarly, 10% depreciation can be charged on a written down value of the asset, which will be depreciated on a percentage basis, and you have to calculate the WDV every year. Okay. Okay.
Schedule
Now,
2, Schedule 2 contains a list of useful life according to class of assets, and the residual value shall not be more than 5% of the original cost of the asset.
okay. Now, you can't depreciate. First of all, you have to calculate the useful life, and then you have to keep at least 5% as the residual value. For example, you have bought a machine for 10 lakhs. So you can say 50% will be its, residual value. That means when you sell that asset, it will have command some value. So that is called the residual value. Okay. Fine. So,
However, companies are
okay,
free
just
to
hold on, just hold on. Depreciation method. Okay. Just hold on. I'm just skipping that. So depreciation, now I'm just reaching to depreciation as per the rates as per the Companies Act. Okay.
depreciation as per New Companies Act is allowed on the basis of the useful life of asset and residual value. Depreciation rates are not given under the New Companies Act. A table is given below of depreciation rates applicable if the asset is purchased on and after 1st April 2014, and useful life is considered as given in Companies Act 2013, and residual value as 5%. For
Okay.
all
Yeah.
other cases, calculate depreciation rate using our depreciation calculator. That's
Okay.
it.
So that means if you look at, these are the, the assets, nature of assets. For example, a building. Okay. So the building can be, can be classified into various kinds of building, which are with RCC frame. So where the useful life is 60 years, it's a pakka building. Like, normally the buildings and houses what we stay. they are, concrete building. I mean, so their life is considered as 60 years. So the depreciation rate is given for straight line as well as written down value. So similarly, factory building, the useful life is considered 30 years, where the rate of depreciation as per written down value is 9.5%. So similarly, the depreciation rate for everything is given. Okay, these are all as per the Companies Act. Okay, now let's go and go and read what is your depreciation as per income tax. So this is depreciation as per income tax. So let's go and see that. So this is more important because we are considering now income tax. So here we are going to spend a little bit more time. So depreciation rates, just read this.
Depreciation rates for financial year 23-24 under Income Tax Act. The concept of depreciation is allowed under the Income Tax Act. Depreciation under the Income Tax Act is a deduction allowed for the reduction in the real value of the tangible or intangible asset used by the taxpayer.
So that means you can have assets which can be tangible assets or it can be intangible assets like copyright, patents. So you can depreciate, all kinds of assets. The depreciation rates are given under the rate. So now if we just move on to the Excel sheet, back to the Excel sheet. So I have given the rates of depreciation here. Okay, so if you just move at the top, under income tax, the depreciation is calculated on the basis of block of assets. Now, under the Companies Act, each individual asset is a separate asset, and depreciation is calculated on the basis of the amount, of the number of days it has been used. Okay, whereas under the income tax, this thing, the depreciation is basically under two parts. Part A, which is the tangible assets, and then there are blocks. Fine. So there are about 3 blocks for buildings. Now, building can be residential building, owned by a company where the people are staying. Okay. For example, I have stayed in my life in a company house in somewhere very near to Nagpur. So we had about 500 houses there, which was made by the company for for residential purposes. So there the depreciation rate is 5%. Okay, but the normal rate of depreciation is for building is 10%. So this is mainly used not for residential purpose, and this is the block 2. So similarly, there are there are certain buildings which are not very concrete, which are made of wood or of other this thing. They are not solid bridge, buildings. So there the depreciation is 40% because the life can be just 2 to 3 years. They are not made of RCC. So then we have, again, purely temporary erections is block number 4, 40%. So similarly for furniture, there is only one block. Rate of depreciation is 10 as per the income tax. Now, plant and machinery is the third item under this thing. And then there are various kinds of, assets, which can be motor cars, which can be plant and machinery, which can be computers. So there are so many blocks here. Okay. So if you can see that there are about 18 blocks. Okay. So notable blocks are like computers where the depreciation is 40%. Okay. So plant and machinery general rate is 50%, block number 18. Similarly, ships is again classified under various. So intangible assets like, copyrights and everything, the rate of depreciation is 25%. So all these rates are given under the, income tax. So while calculating the profit of a company, you have to use these, rates for determining how much profit, how much tax the company is supposed to pay. Okay. After you have calculated adjusted your profit loss account as per the depreciation chargeable under the income tax, you will arrive a new profit on which you will be paying taxes. Okay. Now there are some more rules. Read this, Suraksha.
Asset used for less than 180 days, it has been provided that
Sorry. Yeah.
it has been provided that where any asset is acquired by the assessee during the previous year and is put to the use for the purposes of business or profession for a period of less than 180 days, depreciation shall be allowed at 50% of the allowable depreciation according to the percentage prescribed in respect of the block of asset comprising such as such as asset. It is significant to note that this restriction applies only to the year of acquisition and not for subsequent years.
So, the rule says that if you have bought an asset for and you have used it only for 180 days or less, then whatever depreciation rates are given, you have to give only apply 50% rate. Okay. Suppose you bought, a plant for 10 lakhs and you have used only for 2 months. Okay. For plant and machinery, suppose the rate of depreciation is, let's check what is the rate of depreciation. It is 15%. Okay. So, for example, you have purchased a plant which is costing you 10 lakhs. Okay. Now the rate of depreciation is what, 15%. So normally if you have used it for more than 180 days, then you are entitled for a depreciation of 150. Otherwise, you will be charging depreciation just half of it, 75,000. Okay. So if you have used it for more than 180 days, then this is for less than 180 days. So if you have used the asset for less than 180 days, then the depreciation rate will be 50. So this will be only for the first year. Okay. Then read this.
Additional depreciation on plant and machinery acquired. In case of an assessee exercising the option of shifting out the default tax regime provided under the Section 115 BAC 1A and paying tax as per the optional tax regime under the regular provisions of the Act,
Hold
additional
on, hold on, hold on. Now, if there is something called additional depreciation. Now, additional depreciation is only applicable if you have, opted out of the default tax regime. Okay. So government wants that if you are using the normal tax regime to pay taxes, then you are allowed some more deductions. But if you are using the default scheme, the number of deductions go down. So this additional depreciation is only applicable if we are using the normal, tax regime, the old tax regime, okay, not the default tax regime. So where you can claim 20% tax depreciation further in the year of buying of the machine. Whenever you buy a new machine, you will be entitled for additional depreciation of 20%. For example, suppose you bought the asset for say 10 lakhs. Okay, fine. And the depreciation rate is otherwise 15% normal. So you will be entitled for this, the normal depreciation, and also another 20% in the first year. Okay. So you can claim this depreciation also on the asset. So that means you will be total depreciation you can claim the first year itself will be
3,50,000.
3,50,000. Fine. So this is the additional appreciation whenever you buy a new machine, okay, which is used for manufacturing purposes. Okay. Fine. Now, if you are, using this machine only for less than 180 days, then again only 50% depreciation will be applicable. So you will be entitled for 1 lakh here and 1,50,000. So in that case, the total depreciation will be only 2,50,000 because you have used that new machine for less than 180 days. Okay.
So this is applicable if we are opting for the old regime.
Old regime. Yeah. Fine. If you are opting for basically under 115 BAC, then this depreciation will not be applicable to you. Okay, fine.
Okay.
Okay. So this is, now let's come back to that. So expenses debited to statement of profit loss account. So this is under 115 BAC. That means this is the default where additional depreciation is not allowed to use. That's the difference between the two. Okay. So depreciation as per books will be added. Okay. Because first you have to add that depreciation, and then somewhere down the line, if you can see that, expenditure allowed as deduction but not debit. So depreciation computed as per rule 5 of the income tax rule. So this is the depreciation as per the income tax rules which are allowed to you. Okay. So that means you will be doing two things. First, you are going to add the depreciation, and then you are going to reduce the depreciation. So which depreciation which you are going to reduce?
According to the income tax.
As per the income tax. Yeah, definitely. And which depreciation you are going to add?
No.
Companies Act.
As per the Companies Act. Okay. Fine. Is that clear?
Yes, sir.
Now, then, income tax disallowed. Now, if you have debited your income tax, okay, fine. So, for example, let's go and, check here, because you are going to calculate, depreciation. Sorry, you are going to calculate your, profit. So that means if you have shown income tax here, so that needs to be added because you are going to compute it again. Okay. Suppose you have shown income tax, so this will be disallowed. Fine. So income tax is not an expense. Fine. So if you are going to recalculate your, suppose you have calculated income tax and you're going to check, whether your income tax is correct or not. So first you're going to add income tax, which has been shown as an expense. Okay. And then recalculate income tax as per the income tax rules. Okay. So income tax is not an expense. That's where we are adding. Okay. Suppose a company has earned 1 lakh rupees profit, they have to pay 30% tax. So, so they have to pay 3 lakh rupees. Okay. So it's like this, suppose a company has earned, again, let's say 10 lakh rupees of profit. So income tax rate is, say, suppose, for example, 30%. Okay. So they have to pay this much of tax. Fine. So they can't reduce this here. They can't say, my profit is this for calculation of tax purposes. Okay. Fine. So if sorry, reduce will be here. Uh, so they have to reduce. Suppose they are showing a profit like this in the statements. Okay. So it is 7. So that means they have to first add this 3 lakhs, and then calculate the profit, and then, calculate what is the tax they are supposed to pay. Okay. So it will be the same thing. Fine. Suppose they have done, by mistake, they have calculated, say, 25%. Fine. So they are going to, first add this, and then, they calculated the profit after tax this, and then they add this and recalculate the profit and pay 3 lakh rupees taxes. Okay. So I hope you have understood. So first you have to add the income tax. You have to disallow that and calculate as per the rules. Okay. Fine. Read this, Suraksha.
30%. 30% of sum payable to residents on which tax is not deducted at source or has not been remitted on or before the due date US 139(1) after deduction disallowed under section 40A(1)(a). The same is allowed in the year in which the tax is deducted and remitted.
Now, this is a very good provision where they say, like, suppose, I'm, giving lectures for, Shivnadar, and, they have to deduct, say, 20% tax from my, money which they are paying to me. Okay. My lecture fees. Suppose they don't deduct that from my income and they pay me the full amount. Or suppose they have deducted, but they have not deposited that money with the income tax, before filing their income tax return under section 139(1). So where you have to file your income tax return under section 139(1) for all companies, all assessees, which are subject to tax audit or something. The last date of filing the return is 30th of October. Okay. So normally 30th of September and 30th of October they are the 2 dates on which you are supposed to file the returns if you are a business assessee. But if you are a salaried person, then you have to file the return on 30th of July. Okay. Now, in case if you have not, deposited, Shivnadar has not deposited the tax which they have deducted from my income before, filing the return, then they will be disallowed. Then that expense, because they have paid me the lecture fees, so it's an expense from them. It is an expense for them, so they will be allowed this expenditure. But since they have not paid the TDS into the government account, so 30% of the money which they have paid to me will be disallowed. Okay, and that disallowed is given under section 40A. Okay, so it will be allowed only when the amount is deposited in the next year. Suppose they have not deposited by mistake. For example, Shivnadar deducted, some 1 lakh rupees from my, honorarium or from my lecture fee, and they have not deposited. Suppose they have deposited in the month of November, after 1 month of filing the return. So they will 30% of the amount will be disallowed, and then it will be allowed in the next year. Okay, because they have deposited late. So we'll do a question so you can follow this. Read this.
Any expenditure incurred in respect of which payment is made for goods, services, or facilities to a related person, to the extent the same is excessive or unreasonable in opinion of the AO, having regard of its
Fair market value.
fair market value, disallowed under section 40A(2).
Okay, now, generally there is a section 40 which disallows certain expenses. Okay, so this is a section which covers, all the expenses which are disallowed. So there are various kinds of expenses. Okay, AO means assessing officer. Okay, which is a commissioner of income tax or income tax officer. So any expenditure, suppose, for example, I would say, I'm doing a business. Okay. So I have kept my brother as, an employee in my company, and I'm paying him 1 lakh rupees salary. Whereas, the salary should have been around 50,000 rupees, the market rate, but I'm paying him 1 lakh. So then that means I'm paying 50,000 more. So that will be added to my income. Okay. So any expenditure incurred in respect for which the payment is made for goods, services, or facilities. So suppose I'm buying, some equipment or some goods which are, otherwise available in the market for a lower value, but I'm buying it from a related person. Okay. A known person from me, and I'm paying him more money. So in that case, if it is, above the fair market value, it will be disallowed. For example, suppose I have purchased some goods from my brother, which are valuing 1 lakh rupees, but here I have paid him 2 lakh rupees or 2 lakh 50,000 rupees. So that means 1 lakh 50,000 extra what I have paid will be added to my income for calculating the tax purposes. Okay. Can you read this again?
Any expenditure incurred in respect of which payment is made for goods, services, or facilities to a related person, to the extent the same is excessive or unreasonable in opinion of the AO, having regard to its fair market value, disallowed under Section 40A2.
Okay, have you understood? So any expense which is, excessive compared to, you can, otherwise normally buy the goods, the same goods from the market at a lower rate, but you have paid a higher price. So that price will be disallowed. Okay, to the extent it is higher. Okay, read further.
Any expenditure incurred in respect of which payment or aggregate of payments to a person exceeding 10,000 rupees in a single day is made otherwise than the by way of account pay, bank draft, use of ECS,
ECS through bank.
ECS through bank account, or through such other prescribed electronic mode, debit card, credit card, net banking, RTGS, NEFT, IMPS, Bhima Aadhaar Pay, disallowed under Section 40A3.
So which means that if you are making a payment above 10,000 in cash to someone, it will be disallowed. Suppose, I have paid 20,000 rupees as an expense. For example, I have bought some stationery and I have paid 20,000 to the, to the shop. I have paid 20,000 in cash. So it will be completely disallowed because I have to, suppose to make as a business, I have to make a payment through check, either check or ECS, that means the account transfer, or through, credit card or RTGS or NEFT. So if I'm using all these electronic mode, then it will be allowed. So any expenditure which is above 10,000 in a single day. So 10,000 in a single day made otherwise than by way of account by check. So if I'm doing that, that will be disallowed. Is that okay? Okay.
Certain sums payable by the assessee which have not been paid during the relevant previous year in which the liability was occurred on or before the due date for filing return under Section 139(1) in respect of that previous year disallowed under Section 43B.
Now, there are certain expenses which are allowed only if you have paid that amount in the previous year or before the filing of the tax return, whatever date which is applicable to you, whether it's September or October, depending on what kind of an assessee you are. Suppose you, for example, you have taken a loan from the bank, okay, and you have to pay interest to the bank. Suppose you have not paid interest to the bank and you have debited that expense as an expense in your profit loss account. You haven't paid before, in the previous year, or you have not even paid before filing your income tax return. So that needs to be added to your income. Is that clear?
Yes.
So the bank interest is one such instance under Section 43B. Okay, there are others also, so you can just read them for that purpose. Okay, okay, read this.
Sum payable by the assessee to a micro or small enterprise beyond the time limit specified in Section.
Now this is basically to protect a small and medium enterprises. If you are not making payment to small companies or small enterprises in time, that time limit has been specified. Suppose it is 6 months, for example. If I remember correctly, it is 6 months. So if you don't pay your money within 6 months to someone, then it will be disallowed as an expense. So this is basically to protect the small companies. So, sometimes companies, buy goods and they don't pay money. They, delay that money beyond 6 months. So the income tax says, okay, if you do that, then, we are going to add that to your income and you have to pay income tax on that. So this is any sum for small, okay. Okay, just, this is, disallowed under MSC Development Act. Okay, read this.
Personal expenses not allowed as per Section 37.
So that means any personal expenses are also not allowed. Okay. So let's just go to some, just skip them, this thing. Okay. Okay. Now we come back to this. So these were, the expenses. So we have done the main one, expenses debited to profit loss account, but not allowed. Okay. So then now can you just remember what were those expenses which are, which are debited to profit loss account, but not allowable? So whatever you can think of. Suraksha or Kishore or Dia or Anuj, what are those expenses which are not allowed? At least name one.
Depreciation, income tax, which we already deducted. If we have already deducted,
Okay.
then we have to add that back.
Okay. Okay. One is okay. One is okay.
Personal income, sir. Any personal
Expense. So we are talking here
personal
about
expense.
expenses. Okay.
Any
So
personal expense.
any personal expense which is debited to profit account will be this thing. Any other things? Now, Suraksha, you can just chip in. Anything you remember?
Um,
So just
Payment, payment if we have not paid the amount to smaller or medium enterprises, or if we have not paid interest or some expense in the previous year,
to the
that too.
bank for taking a loan. Okay. For
Yes,
example, if you take, yeah.
so
What else?
to add that back as well.
Payment greater than 10,000
Um,
Yeah.
via
Made in cash.
cash. Made
Insane.
in cash.
Okay, and further, this one. Okay, this one.
Acha, if we have paid an excessive amount to a related person, then we have to add that back.
Okay, yeah, yeah, absolutely. And this one, the tax reduction as source. For example, TDS has not been deducted from the person's salary or from the person's income, and then 30% of that amount will be disallowed. Okay, fine. Okay, so we have covered. I think most of you remember. Okay, now let's go back. So then, what is the second one? Less what? Suraksha?
Expenditure allowable as reduction but not debited to the statement of profit and loss.
Okay, so any expenditure which has not been debited to profit loss account will be allowed. For example, the depreciation as per the income tax. Okay, the first one would be the depreciation as per the income tax rules. Okay, sure, can you read this? Or Dia, sorry, Dia, can you read?
Yes, sir. Uh, Depreciation computed as per Rule 5 of Income Tax Rule 1962.
Okay, so this we have covered. Okay, yeah, further.
30% of expenditure disallowance in earlier PY due to non-deduction of tax at source, non-remittance before due date 1391 of that year, allowed this year on remittance. This item of adjustment is generally given under additional information in the question.
Okay, now here we have seen this that 30% was disallowed here. Okay. Now in the next year you have paid it. So next year it will be allowed. Fine. So this is the allowance, because last year you have failed to deduct the income tax, or if you have deducted, you have not deposited in time. So now since you have deposited it after some time, which is late after filing your income tax return, so which means it will be allowed in the next year. Okay. Read this.
Amount disallowed in earlier PY as per Section 438 due to non-payment on or before due date allowed as deduction in this year on actual payment. This item of adjustment is generally given under additional information in the question.
So that means, if you have not paid the interest, for example, you have taken a loan from the bank, okay, you are supposed to pay the interest in the previous year, that is PY, okay. But if you have not deposited the previous year, but if you have deposited before filing the tax return, then again you will be allowed. But if you have, paid it after the filing of the tax return, then it will be allowed in the next year. and not in this year. Okay, so this is, you have allowed that expense in the next year, which you have here disallowed. So earlier you had disallowed this expense. Okay, fine. If you remember this, we had disallowed this expense. Okay, this certain sums payable to sales which have not been allowed, which have not been paid during the relevant previous year. So now, or you can even pay it before filing your tax return. But if you have not done that, then if you have paid it after filing your income tax return, any sum which you have done last year like this, so that will be allowed this year. Okay, fine. Okay, now let's go back to this thing. So Kishore, can you read this?
Income credited in statement of profit and loss, but not taxable under any other head.
Suppose you have some other income which you have shown in your profit loss account. Suppose it's dividend, for example. Now dividends are taxed under income from other sources. So that means you have to reduce that. Okay, fine. So let's see that. What are there? Okay, first one, just read that. Kishore.
Income credited in statement of profit and loss, but not taxable under any other head. Dividend income. Agricultural income exempt under section 10(1).
Okay. Now, suppose you have shown you have credited your dividend income, so that you needs to reduce because that is not the income taxable under the income from business or profession. So even the agriculture income, if you have credited in your profit loss account, so that needs to be reduced because agriculture is not going to be exempt, so you don't have to pay any tax. Suppose you have shown some income in your profit loss account which is not either not covered under the business profession or it is not taxed. Okay, so you have to first reduce that. Okay. Read further.
Interest on securities, savings bank account, FD taxable under the head income from other sources.
Okay, just hold on. So that means any income like you have received some interest on bank account or FD, so that is also taxable under the head income from other sources. So that will be also added. Okay. The last one.
Income
Add.
chargeable under this head deemed income. If the same is given as additional information and has not already been credited to the statement of profit and
Okay,
loss.
just hold on. So let's see what is that. Okay. Okay. Just read it.
Salary remuneration interest received by a partner from the firm to the extent the same is deductible in the heads of the firm as per section 40B.
Okay, hold on. Suppose you are having a partnership firm and you have paid some salary to the partners. Now, the salary to the partner is not a business expense, so that need to be adding. So, because salary will reduce your profit loss account, so you need to add that salary which you have paid or any interest you have paid to the partner on his capital. So that two items need to be added. Is that okay? Suppose, for example, you are running a business, okay, and it is in a partnership form, and you are two partners. So you have paid some salary to your partner. So it is going to reduce your profit. So the law says that any salary which you have paid to a partner or any interest you have paid to the partner, that needs to be first added before calculating the tax. Okay. Then further.
But why, sir? Salary, if two partners are working, then salary has to be included, no? Like
Huh.
excluded from the profit and loss.
Okay. Just read this again.
Salary remuneration interest received by a partner from the firm to the extent the same is deductible in the hands of the firm as per section 40B.
So that means there is a rule regarding this. Okay, you can't pay. Suppose your company has earned 10 lakh rupees of profit, so you can't share 10 lakh rupees salary and reduce your tax at all. So there are rules how much salary you can pay to a partner. So only up to that level it is allowed. Rest is added. So you are right, absolutely pointing that salary is an expense even if it is paid to the partner. But there has to be some mechanism. There has to be some rules. Okay, so we are going to check that rule. Okay, later on. So not
Okay.
all salaries are allowed. There is some kind of I mean, amount which is allowed as some percentage of profit can be paid as salary to the partners. Not everything. Okay. Otherwise, you
Okay.
can reduce all your firm profit and you can transfer all the salary will become the income chargeable in the hands of the partners. Okay, as their income. So
Yeah.
basically this will distort the income tax for the firm. Okay, read further.
Bad debt allowed as deduction under Section 36(1) in an earlier previous year, now recovered.
So if you
Deemed
are able to, recover some bad debt, okay, you have charged this, you have shown as an expense in the earlier years, but now you have recovered, okay, so that will be added back. So we have understood most of the things, okay. So now let's, go to a question number one. So this is very important. So please, this such type of question will be there in your exam, okay, fine. So if you are able to do this question, it will be good enough. There is only one question which I have put. Other questions are from, not from here. This is basically for the other chapter which are going to cover. That is, business, this thing, treaty and other things. Okay, double taxation relief. So there is only one question which I am doing from this head. So please do it carefully. It will help you to solve your problem in your exam. Okay. So, Mr. Read this, Kishore.
Mr. Raju, a manufacturer at Chennai, gives the following manufacturing, trading, and profit loss account for the year ended 31st March 24.
Okay, just hold on. So now this is his profit loss account. Okay. Now tell me, Dia, what is the profit which company has earned? How much profit this Raju has earned?
Sir,
Within
71,000.
71,000 कहाँ पर है? No, वो तो ओपनिंग स्टॉक है. प्रॉफिट लॉस में कहाँ आ रहा है? प्रॉफिट कितना अर्न करा है कंपनी ने? सुरक्षा
5 lakh.
5 lakh. So this is coming here. 5 lakh. This is the net profit. So I'm just making it bold. Okay. So remember that this is the starting point. Okay. Net profit as per the profit loss account. So you have to start from here. Okay. Now this I have linked. Okay. So why I'm telling you, because you can, because the figures will be different in your exam. Okay. Suppose for example, I make this figure as, a closing stock. If I make it as say 4 lakhs, what will happen? The profit is going to go up. Okay. So profit has come to 7 lakhs. Fine. So it's all linked. Fine. So in your exam also, I believe it will be linked, or if it's not linked, then you can just link it. Okay. It's very simple. Okay. Fine. And like this gross profit, which is coming here, which is also being repeated here. Okay. For example, if you can just see, वैसे तो आपको ये आपको आप use कर सकते हो, because this will be available to you. Okay. In your exam. So you can always open up this Excel sheet while you are solving your question. Okay. Fine. Now this is the profit. Okay. Now there are some information which is given. Read this, Kishore.
Following are the further information relating to the financial year 23-24. Administrative charges include rupees 46,000 paid as commission to brother of the SSC. The commission amount at the market rate is 36,000.
So tell me, 46,000 was paid to his brother. The market rate is 36,000. So how much will be disallowed? Anuj?
10,000.
10,000. Right. Okay. Fine. So that means we are going to take this thing and add this 10,000 here. Fine. So we are going to understand. Yeah. Is that clear?
Yes, sir.
Okay. Then read this.
The SSC paid rupees 33,000 in cash to Transport Courier on 29th or 12/23. This amount is included in manufacturing expenses.
Now, we know that rule is that anything paid above 10,000 is disallowed.
10,000.
Okay. But in case of a transport courier, the limit is 35,000. Okay.
Okay.
The limit is 35,000, which I'm going to just show you here. Okay. Just read this.
This allowance under Section 40A(3) is not attracted since the limit for one-time cash payment is 35,000 in respect of payment to transport operator. Therefore, amount of 30,000 paid in cash to Transport Courier is allowed.
So that means in the question it is written that he has paid how much? 33,000. Okay. So what I have done is that I have also given a link here. Okay. Fine. So this link you can open up.
Okay, sir.
So I just included that link, so you can just open for a purpose to understand what is this. Okay, just read this.
Payment in cash to transporters up to 35,000 from 1st April 2009.
Okay, just hold on. That's all. We are not going to read further. So if you are paying to a transporter, now because why this relaxation? Because the transporters, they'll come and they'll ask for cash, because you can't pay them check. Fine. If suppose there's a one-time transporter, he brings your goods to your factory. So he says the bill is 33,000, so you have to pay him. Okay, fine. So this is an exemption to a normal limit of 10,000. Okay, so you can pay up to 35,000 to a transporter for transporting goods, and that will be allowed. Okay, fine. So let's come back here. Let's go to the question. So now tell me this. What will happen? Read this again, Kishore.
The SSE paid rupees 33,000 in cash to a transport courier on 29/12/23. This amount is included in manufacturing expenses.
Okay, so manufacturing expenses are given here. Okay, which includes this expense of how much?
33,000.
33,000. So will it be allowed?
Yes, it is allowed.
So we are going to ignore this. So this information is not. But suppose if this figure was, for example, 40,000, in that case, what will happen?
5,000 would have been added.
No, entire 40,000 will be disallowed.
Huh? Entire, sir?
Entire. So if it is 40,000, you can pay only 35,000, up to 35,000. But for a single transaction, suppose you are paying 40,000, entire money will be disallowed. Is that okay?
So entire 40,000 will be added.
Yes,
Yeah.
sir.
So this is the rule, but you can always say I don't know whether there is any court rule which says that you can allow this thing, but we need to check that. Okay. So let's see the rule here which we okay. So we can just again we can just go and see that. Okay. So what is there? What was this thing? Transporter. So I'm just checking that. Okay. Transport. So, okay, just read this.
Disallowance under Section 40A3 is not attracted since the limit for one-time cash payment is 35,000 in respect of payment to transport operators. Therefore, amount of 30,000 paid in cash to a transport carrier is allowable as deduction.
So only so we can check that. As you said that 40,000 only 5,000 will be disallowed. It's not entire 40,000 will be disallowed. So at the moment, just stay with this number. Okay. So entire, suppose it is 40,000. So entire 40,000 will be disallowed. Okay.
Okay.
Fine. Okay. Read the third one.
Bank term loan interest actually paid up to 31st March 24 was rupees 20,000 and the balance was paid in November 24.
So how much bank interest loan the company has paid? Just check. How much is the bank interest on bank? How much is that?
60,000.
So how much he has paid, in time, basically?
20,000.
Bank interest loan actually paid up to itna was 20,000 and balance was paid in November. Okay.
So that will be added.
That means, 20,000, only 20,000 will be allowed. Rest 40,000 will be added because he has paid the money after the filing of the income tax return, which is last date is 31st of October. Okay. Fine.
Yes, sir.
Okay. Read this.
Housing loan principal repaid during the year was rupees 50,000 and it relates to residential property acquired by him in previous year 23 for self-occupation. Interest on housing loan was rupees 23,000. Housing loan was taken from Canara Bank. This amount were not dealt with in the profit and loss account given below.
So that means in this profit loss account, there's nothing mentioned about this housing loan because this was his personal affair. So he has taken a housing loan. Okay. So housing loan principal repaid during the year was 50,000. It relates to residential house for self-occupation. Interest on housing loan was 23,000. Okay. So he has paid some interest for a house on the house which is living there. Okay. So if you remember in the housing property chapter, how income from house property. So this is a separate, this is not coming under business income. So he will be normally allowed this 23,000 as an interest on housing loan. Okay. Because he is staying in a self-acquired property. Okay. So, but we are calculating tax as per the default regime. Okay. So let's see. I'll come back to this. Okay. So let's come back. Okay. Read this.
A depreciation allowable under the Act is to be computed on the basis of following information.
So this is the depreciation as per the income tax. Okay, what is the depreciation as per income tax?
Plant and machinery 15%.
Okay, so what is the written down value at the beginning of the year?
11 lakh 90,000.
So how much was the addition during the year?
2 lakh.
For the addition during the year used for more than 180 days. Total additions during the year 4 lakhs. Okay,
4 lakhs.
so total addition was 4 lakhs, and out of that 2 lakh was used for 180 days. Okay, for more than 180 days. So this is information which is given. Now read this.
Compute the total income of Mr. Raju for the assessment year 24-25, assuming he pays tax under default tax regime.
So that means he's using a default tax regime. Okay, so he'll not be allowed any additional depreciation. Otherwise, had he chosen not to file tax return under the default, he would have allowed a depreciation for the new additions which he has done. So he'll be entitled for only 15% and not that 20% which we discussed. Okay, fine. So let's look at the question. Okay, so here I'm just going to show you net profit as per profit loss account. So this is basically we have taken it from the
Yes, sir.
that figure. Okay, now
5 lakh.
for okay, read this.
Add excess commission paid to brother disallowed under section 48(2).
So 10,000. So we have said actual is 46,000, market rate is 36, excess is coming here. Okay,
Yes, sir.
so I just made this thing, so it is coming from here. Okay, now read this.
This allowance under section 40(a)(3) is not attracted since the limit for one-time cash payment is rupees 35,000 in respect of payment to a transport operator. Therefore, amount of rupees 33,000 paid in cash to transport carrier is allowable as deduction.
So this is there is no addition here, okay, because the 33 has paid only 33,000, which will be fully allowed. So there will be no, change in the profit loss account. So, I mean, this figure will be nil here. Is that okay?
Yes, sir.
Okay, read this.
Bank term loan interest paid after the due date of filing of return under section 139 disallowed as per section 43B is 40,000.
Okay, so which means, 20,000 he has paid after due date. He has paid 20,000. Okay,
With
so sorry, he has paid 20,000 after due date. Let's go back and check what was the.
No sir, 20,000 within due date.
हाँ तो इसमें कुछ गलती है एक सेकंड देखते हैं रीड दिस
a bank term loan interest actually paid up to 31/3/24 was 20,000 and the balance in 24 November.
हाँ तो 20,000 तो उसने पे कर दिया था तो अलाउड
ड्यू
डिसअलाउ
डेट से
कितना होगा
पहले
40 हाँ 40,000 डिसअलाउ होगा ओके
हाँ सर सही है सर वो
हाँ
40,000 ही
वो
ऐड
सही
बैक
था वो लेकिन मैंने वो यहाँ पर लिख दिया था
साइड में से
40,000
नहीं
पेड
लिखा
हाँ
होगा।
so this is actually 40,000 okay fine so this I can just reduce it okay so it is 40,000 here fine so which is 60 which I have used the reference minus this okay fine so this is coming from the profit loss account okay now अच्छा एक चीज और है let's go back here expenses debited to statement but not allowable okay just read this
fine or penalty paid for infringement or breach of law.
So if you are suppose you have paid any fine or penalty, okay, that will be disallowed. Just read this full again.
Fine or penalty paid for infringement or breach of law. However, penalty in the nature of damages for delay in completion of contract being compensatory in nature is allowable.
So any fine. Suppose you are paying any fine under the income tax, under the GST, under any law. So that will be not allowed because it is not a business expenditure because you have not met the date, you have not met the law, and you are paying some penalty. But however, if you pay a penalty for delay in completing the contract, okay, so that will be allowed because this penalty will be charged by your vendor and not by the government of under the various law. So that will be this will be added. Okay, so this will be coming under the expenses debited to statement of profit account, but not allowed. So let's go back here in the question 1, and let's go to answer. So just read this.
State GST penalty paid disallowed.
Now, if you look at the question, No, it is not there here, but it is here. SGST penalty 5,000. So you have shown
Okay.
this as an expense in your profit loss account. Okay. So this will not be allowed. So you can't claim this. So that means your profit is should be 5,05,000 for paying income tax. Okay. Because penalties are not allowed. If you have paid any penalty for either income tax or GST or any other penalty under any law, then it will not be allowed as an expense. Okay. Is that clear?
Yes, sir.
Okay. Read this.
Depreciation debited to profit and loss account.
So how much is the depreciation which he has charged? Let's see. This is as per the 2 lakh is the depreciation which he has charged. So first we are going to add this depreciation. Okay,
Yes.
fine. So then we are going to have, start with 5 lakhs and then we add all this. It will become 755. Then less. Read this.
Dividend from domestic companies chargeable to tax under the head income from other sources.
Now, if you just look at here, so while calculating the net profit, he has shown some dividend from domestic companies. Okay, and what is this? Read this. Both these two.
By dividend from domestic companies 50,000, income from agriculture net 1,80,000.
So that means this we are going to make adjustment here. Okay, so that means these two we are going to reduce. Okay, fine, because this is actually increases net profit. So this we are need to going to reduce that because this is not shown as a income from business or profession. So this is an exempt, and this will be showing as an income from other sources under separate head. Okay, is that clear?
Yes, sir.
Then we have depreciation.
Then depreciation under the Income Tax Act 1961.
So this is here. So we can just check this. So this what I have done is I've calculated that. Okay, here. So what was the written on value? 11,90,000. This is given in the question. Okay.
Yes.
So what we did was we just went to this last one. So this figure we have shown here. 11.
Yes, sir.
Additions during the year. 2 lakh rupees for more than 180 days. Another 2 lakhs for more than 180 days. So total additions were how much? 4 lakhs. Okay. 2 lakhs. Total additions 4 lakhs. So that means 2 lakhs was for more than 180 days and 2 lakhs was for less than 180 days.
Less than.
So then depreciation rate is 15%. So we have used the depreciation rate of 15% on that. So which is this depreciation 2,08,000, and then we calculated the depreciation for the less than also. Okay, so we have calculated the depreciation for on two bases. So one on 2 lakhs, which is 15%, another 2 lakhs, 7.5%. Is that clear? Because this 2 lakh was used for more than 180 days. This one, okay.
Okay.
This was for less than, this was for more than, and this was for less than. Okay. So both are same. I mean, in term value. So we are going to apply 15% rate here and 15% rate here. So it will become, and 15% rate will be basically this plus this. Okay. अगर यहाँ देखें हम, so this is basically 11,90,000 opening balance plus 2 lakhs into 15%. Is that okay?
Yes, sir.
दोनों जुड़ गए 11,90,000 plus 2 lakhs का 15%. 2 lakh.
जो भी greater than 180 है उसको हमने 15% पे चार्ज किया, जो less than 180 है उसको हमें 7.5 पे चार्ज
तो उसमें ओपनिंग बैलेंस तो होगा ही होगा, जो 180 डेज से ऊपर वाला है वो भी ले लिया हमने, और इस साल में 180 डेज से ऊपर वाला है वो भी ले लिया, तो ये हो गया. इज दैट ओके?
यस सर.
Fine. This depreciation is going to be 2,23,500. Is that okay? Fine. So then we can just check here. 2 lakh. We have shown 2,35,000 here, which is coming from here. Is that okay?
Yes, sir.
Fine. So remove errors. But we are just done through. Okay. So then we have so then we have calculated profit and gains of business or profession, which will be 3,30,000. So which will be basically, so this is here. So so we have calculated how much is the profit from business or profession. Okay. So we started with 5 lakhs. Okay, we added this 2,55,000, it became 7,55,000. Then we reduce the dividend income and income from agriculture income and the depreciation as per the income tax. So which came income from business or profession. So you had almost 98% of the question has been solved. Okay.
सर
हाँ
सर ये जो क्वेश्चन में दिया रहता है WDV एज ऑन 31/3/23 11,90,000 था, फिर हमने
हाँ
इस बार कैलकुलेट करके 13,66,500 निकाला, वो एक्चुअली क्या है, बुक वैल्यू है क्या एसेट का, या क्या है वो?
हाँ, ये आ गया ना, देखो अब ये जो वैल्यू आ गई है, दिस इज द WBV फॉर द नेक्स्ट ईयर. फाइन. अब नेक्स्ट ईयर फिगर जो है वो ये लेंगे हम. Okay, so this will be the opening balance. Suppose he has added, say for example 6 lakh this year. So अगले साल की डेप्रिसिएशन कैलकुलेट करने के लिए.
हाँ, वो तो ठीक है सर.
हाँ
मतलब ये जो ऊपर जो 11,90,000 दिया हुआ है क्वेश्चन में
हाँ
कि WDV एज ऑन 31/3/23, वो एक्चुअली में क्या चीज है? एक्यूमुलेटेड डेप्रिसिएशन है या
नहीं,
एसेट का
ये
बुक?
एसेट की वैल्यू है. दिस इज द वैल्यू ऑफ द एसेट.
एसेट का बुक वैल्यू है वो?
हाँ, एसेट का बुक वैल्यू है. बुक वैल्यू एज पर इनकम टैक्स पर्पसेस. ओके.
अच्छा.
So company needs to maintain value of the assets both as per Companies Act as well as per income tax. Okay, for charging depreciation. For next year कैसे depreciation चार्ज करेंगे? तो ये वैल्यू तो आपके पास होनी चाहिए ना, पिछले साल की जो है ये अलग से आउट ऑफ द बुक्स उनको मेंटेन करके रखना पड़ेगा अपने पास.
ओके.
फाइन. तो आपका यहाँ देखो, आप फॉर एग्जांपल you go to this. I'm just show you what is the as per Companies Act. Okay. तो अगर हम ये देखें और स्क्रीनर पे जाएं, and check Reliance. So check a balance sheet. So this is the fixed assets जो आ रहा है आपका. ओके. सो ये जो चीज है, ये ग्रॉस ब्लॉक एक्यूमुलेट डेप्रिसिएशन, ये माइनस करने के बाद जो फिगर आती है वो होती है रिटन डाउन वैल्यू. ओके.
अच्छा.
फाइन. So this is as per the Companies Act. But for the tax purposes, you have to maintain a separate figure, which will be, kept in your tax calculation sheets for all the companies. They have to do that. Okay, fine.
Okay.
So ये as per Companies Act नहीं होगी. This will be as per the income tax rules. Your depreciation, written down value. This is the value of the books assets as on 31st of March 2024. Okay, this is the total written down value, depreciated value of your assets. Okay,
ठीक है सर.
right? Is that clear?
यस.
Okay, so ये हमने कर लिया था, यहां तक पहुंच गए थे. अब इनकम फ्रॉम हाउस प्रॉपर्टी. So annual value of self occupied property nil, because this is a self occupied property, so since you're not earning, so interest on housing loan. Okay, so just read this.
Interest deduction under section 24B, interest on housing loan not allowable since Mr. Raju is paying tax as per default tax regime.
So suppose he would have chosen not the default regime, then this figure should have been replaced with this amount which is given in the question. Okay. अगर वो कहता है मैं डिफॉल्ट regime में नहीं हूं, so then he can claim this 23,000 as interest. Okay.
Interest
हाँ, तो
23,000.
यहाँ पर फिर हम इसको 23,000 दिखा सकते थे अब.
Yes sir.
Okay, since he is using the default regime, so this will be not there. Okay, fine. Is that okay?
Yes
Then
sir.
income from other sources, dividend income, 15,000. Okay, so this is his GTI, gross total income. Okay. Now deduction under ATC. Read this.
Deduction under ATC not allowable since Mr. Raju is paying tax as per default tax regime.
So is this clear, Kishore?
Yes sir.
What about others? So Raksha, why this ATC deduction has not been allowed to him? Suraksha is there? कहाँ गए सारे?
Sir,
हाँ, okay. Kajal, are you there? I think a lot of students are there. Kishore, you wanted to ask question?
sir, the dividend wala part 15,000, why we have added?
I'm just going to show you that. यहाँ पर
हाँ,
now we are going to calculate his total income, right? Income from all sources. So income from business, it was this. Okay. Then income from house property, nil. Okay. Income from other sources, dividend from domestic companies. So he's going to pay tax on that. Na?
this is income from other sources.
हाँ, यहाँ पर हमने क्या करा है, यहाँ से हमने कम कर दिया था
कम करेंगे वहाँ
यहाँ पर, क्योंकि this is not a business profit. Okay, fine.
Yes.
So it has to be shown under a separate head. Okay, which is income from other sources.
ठीक है सर.
Okay, so that's why we added. I hope you have followed this. So then we are going to have a small break now. So before that, so I've just shown you that there is, another head called income from other sources. Okay. And so I've just shared also. Just open this. Can you read this, Kishore?
Comprehensive Guide to Taxation on Income from Other Sources in India.
Okay, just hold on. So what is the income from other sources?
Interest income, rental income, dividends and mutual funds, family pension, lottery and gambling winnings, gifts and cash prizes, income from royalties, club membership fees, income from agricultural activities, commission income, annuity payments, income from subletting, interest on income tax refunds, scholarship and fellowships, income from freelancing and consultancy, prizes and awards, income from savings bonds, income from foreign assets, advances and gifts on occasion, income from intellectual property transfer, income from lease, earnings from digital platform, income from crowdfunding, and honorarium.